Hey everyone, I'm here to break down the latest updates on the US economy and what it means for your investments. So let's dive right in. First up, the dreaded R-word recession. The chance of a recession in the next 12 months has jumped to 45%, up from 25% just last month. This spike is largely due to aggressive US tariff policies. These tariffs are expected to slow economic growth significantly, with forecasts downgraded to 1.4% for this year and 1.5% for next year. Inflation is another hot topic. It's projected to stay above the Federal Reserve's 2% target until at least 2027. Currently, the inflation rate sits at 2.4%, down from 2.9% in January. This limits the Fed's ability to cut interest rates significantly. We're looking at rates holding steady between 4.25% and 4.50% until at least July, with a modest reduction to 3.75%-4.00% by year's end. Consumer and business sentiment is weak right now. People are worried about prices, jobs, and their overall wealth, which is slowing down spending growth. Businesses are also cautious about making new investments due to these tariff uncertainties. Unemployment is another key indicator to watch. The rate is currently at 4.2%, slightly up from 4.1% at the start of the year. It's expected to average 4.4% in 2025 and 4.6% in 2026. Now let's talk about something we all deal with: consumer prices. Eggs have increased by over $2 per dozen since January. Milk has decreased slightly, down by 5 cents to $4.05 per gallon. Ground beef is sitting at $5.85 per pound, and gasoline has ticked up by 5 cents since January. But here's the kicker. Chocolate prices are surging due to a combination of soaring cocoa costs and new tariffs. Speaking of tariffs, Trump's new tariffs on all imports are expected to increase consumer costs by an average of 3%, or roughly $4,900 per year. These tariffs are a key factor in the projected economic slowdown and increased inflation. And let's not forget the cocoa crisis. A deficit of over 400,000 tons has driven prices from $2,000 per ton to over $12,000 in 2024. This is heavily impacting chocolate producers and, of course, our wallets. Finally, a bit of political context. The economy was a major issue in the 2024 presidential election, with 80% of voters considering it very important. Donald Trump began his second term in January 2025. So, what does all this mean for the dollar and your investments? The US economy is facing significant challenges, and it's crucial to stay informed and be prepared for potential market volatility. Keep a close eye on these economic indicators, and as always, consult with your financial advisor to navigate these uncertain times. Thanks for tuning in, and don't forget to like, subscribe, and hit the bell for more updates. See you next time.